It's been a busy Thursday in the world of corporates, but how busy has it actually been? Let's find out in today's Corporate Central. I am Ajay and let's begin. Our first news is on a healthy food, but how healthy has it been for the bourses? The offer for sale of Patanjali Ayurved, Baba Ramdev co-founded Patanjali Group's flagship entity, received a tepid response as it opened on Thursday. The institutional allocation was subscribed only 2 times. The Haridwar-based firm, which holds around 40% in BSE-listed Patanjali Foods, plans to sell 9% of the total shares within 2 days starting today. The move, however, has resulted in a sharp decline in its market valuation as its stock plunged 5% in early trade, hitting the lower circuit. One of the key factors that led to this sharp fall in its share price lies in its OFS. While the stock was trading at 1,228 rupees a share at the end of July 12, which was a day before the OFS began. The company launched its OFS at a floor price of 1,000 rupees a share and at a discount of 18.6%, resulting in public shareholders liquidating their positions. Well, SpiceJet took off quickly but landed even quicker on the bourses. The shares of SpiceJet on Thursday jumped 7.5% to 33.5 rupees after the company said its promoter and chairman Ajay Singh will infuse 500 crore rupees into the airline. The fund infusion will help the company access additional credit of 206 crore rupees under the Emergency Credit Line Guarantee Scheme. But by close, it had surrendered all the gains and ended just under 1% up at 31.4 rupees. The budget carrier, which is facing multiple headwinds, including disputes with aircraft lessors, has been looking to raise funds. On Wednesday, the stock tanked 11% intraday after the DGCA placed it under additional surveillance. And Reliance becomes the chosen one to buy Future Retail. 3 companies, including Reliance Retail Ventures, have been selected as prospective buyers for Future Enterprises, which is undergoing corporate insolvency resolution. The company said in a filing that the resolution professional has finalized a provisional list of 3 applicants. Besides Reliance Retail, Jindal India and GBTL, maker of polyester, viscose and blended fabrics, are on the list. The deadline for submission of resolution plans is August 24. The insolvency process was started in March this year. Reliance Retail is also among the final list of prospective buyers for another Future Group flagship firm, Future Retail, which is also facing insolvency process. Future Enterprises was to be transferred to Reliance Retail as part of a 24,713 crore rupee deal announced in August 2020. The deal was called off by Reliance Industries in April last year. The RP has received a total claim of 7,014.83 rupees against Future Enterprises. And amid a litany of woes that marks the once hallowed world of unicorns, Zepto, the Mumbai-based quick commerce delivery platform, is promising to emerge as India's first unicorn this year, as it is poised to tie up fresh funding that could send its valuation soaring to $1.3 billion, well past the $1 billion eligibility mark to be recognized as a unicorn. The company is about to raise $150 million in Series E funding. The Series E funding is a crucial one since it usually takes place before a company goes for an IPO. The years 2021 and 2022 were the heydays for unicorns, when as many as 67 startups turned unicorns in the country. This includes 43 in 2021 and 25 in 2022. The flood of unicorns started turning into a trickle in the second half of 2022, when only 6 unicorns were reported compared to 19 in the first half. Up next, we have an important update coming in from Sebi. Promoters must disclose to exchanges their family settlement agreements or arrangements that have a bearing or influence on management control of listed entities for such deals to remain legal. In its notified rules, the Capital Markets Regulators, Securities and Exchange Board of India has said that agreements that subsist as of the date of notification are to be disclosed to the stock exchanges. It was earlier understood that only prospective agreements must be disclosed and not retrospective. Sebi said that these rules will bring transparency by bringing out all secrets between parties. The regulator issued a notification on this back on June 14. According to experts, the changes are quite broad and are likely to cover all packs. And it's day one for the new HDFC Bank on Dalal Street. HDFC Bank on Thursday started trading as a combined entity on the stock markets on Thursday. The combined entity of HDFC Bank and HDFC was expected to have a market capitalization of 12.5 lakh crore rupees, but the MCAP was much lower at 9.17 lakh crore rupees at the time of recording. The bank will have the highest weightage in Nifty at 14.43%. About 3.63% higher than Reliance Industries. The shares issued to HDFC shareholders will take about 10 to 12 days to reflect in the demat accounts. The merged entity will now be Asia's second biggest bank. And from corporates, we move on to those stocks that were in news and making headlines for the day, and also analyze the reason behind it. We begin with a stock that has taken a deep dive to go all the way to the top of the bourses. Deep Industries share price touched a 52-week high of 220.05 rupees, gaining 12% in early trade on July 13 as the company received an order from ONGC. The company said in a regulatory filing that the 130 crore rupee order from ONGC is for a 90 MT mobile drilling rig for 3 years. In another filing, the company said that it has acquired a 74% equity stake of Brettling Drilling Private Limited, making it a subsidiary of Deep Industries. The company acquired 740 equity shares with an aggregate investment of up to 7,400 rupees in BPDL through subscription to its shares. And Sebi has given a red card for Venus Remedies. The trading in Venus Remedies has been stopped on BSE and NSE after Sebi brought it under enhanced surveillance measure. Sebi has recently introduced the ESM, or the Enhanced Surveillance Measure framework for micro-small companies listed on the main board, whose market capitalization is below 500 crore rupees. Under the ESM, stock exchanges impose trading restrictions on selected companies, following market surveillance based on Sebi's criteria for price variations. Due to significant price variation observed in the past trading sessions, the trading of shares has been restricted. In the past 1 month, the share has risen 22.5%. ESM is purely a market surveillance measure. Well, that was all about corporates and markets for the day. Moving on now to some important triggers that might strike a major impact in the markets. Let's begin. Watch out for July 14. This will be the second day of PM Modi's tour of France. The results of Bandhan Bank, VST Industries, CCL Products, Tata Steel Long Products, JSW Energy will be declared. The board of Happiest Minds will meet to discuss issue price of QIP. Veranda Learning will hold its board meeting to consider issue of equity. And on the macroeconomic front, wholesale inflation figures for June will be released. IPO of Senco Gold will be listed. The issue was subscribed 77.25 times. This will be the last day to subscribe for Utkarsh Small Finance Bank. The issue was subscribed 16.2 times till 5 p.m. on second day. The price band for the issue is 23 to 25 rupees. And the OFS of Patanjali Foods will open for retail investors. Shares of 10 companies will go ex-dividend. These are Atul Ind, Bosch, Apollo Tyres, Lupin, M&M, Birlasoft, AU Small Finance Bank. Moving on now to some global triggers for July 14. US will be releasing its consumer expectation figures. And the impact of ECB meeting minutes will be seen. That's all for today here on Corporate Central. Until tomorrow, get access to Money9's exclusive personal finance content only on Money9's website and Money9 app. And also keep watching Money9.